Hey guys, this is a market update. Two major factors in terms of the price of Bitcoin that I need to talk about. One is interest rates. The Fed have come out and told us exactly what they're going to be doing this year, which is going to affect the price of Bitcoin and the stock market, and also oil prices, which are just insane. And it's really important because this is going to affect the price of Bitcoin and everything else. So I want to talk about that. Look at the chart right now. Before we get into the video, for everyone that has the crypto course, you can see right here, there are some updates for you coming on the 15th of March. These are the videos that are being made, and there's a few more that I'm going to make as well. But if you're part of the crypto course, you'll be getting these as an update. These are new sections that I'm doing right here. So crypto research, this is going to be a lot of videos about the research that I'm doing about different cryptos. There's going to be a consumer guides section, and there's a new video on Bitcoin that I'm making there. You can check out the crypto course in the description if you're not a member yet. Right, I want to come to the chart right here. So we obviously had this really big green candle and we've hit resistance again. For me, I'm going to talk about the macro factors that are coming that really make me still very, not bearish, but just not exactly buy the dip bullish like we've had, kind of last year, right? So what we've seen really is a fairly bullish chart right here with a kind of double bottom here into a higher low, which is very good, but we're not really getting higher highs, right? You can see we've actually hit resistance once, twice, three times, and then this fourth time right here, and it looks like we don't really know what's going to be happening right here. Are we going to get another test like we got before and maybe move higher, or are we just going to come back to this level here? I continue to feel like buying dips if you're a short-term trader is fine, but again, I don't think we're going to be kind of ripping through resistance levels as much as some other times. It's actually going to come down to a couple of other factors which I want to talk about. So if you do want to get a deposit bonus on Bybit, as you can see I'm using here, check the link in the description. They'll give you up to $4,000 in your futures trading account if you want to go ahead and trade. You just make a deposit of crypto and they'll give you that deposit. So I want to come over to this tweet from Raoul Powell, who said, he's kind of worrying about a global recession. And we know some of the reasons for this, obviously rising interest rates in America, although there's some, fairly decent news in terms of asset prices for that. The other one is the price of oil, and someone actually basically replied to him with the price of oil. So he's saying, it's not odds on yet, but the odds are rising every day, not a certainty. So the reason why he's saying this is really because of supply chain issues, obviously it's kind of made worse with what's going on with Russia and Ukraine right now. And then the price of oil, which really is, it's just a very, very easy indicator to understand. If the price of oil is very high, there will be a recession. It's really as simple as that. So what we can see right now actually with prices is the price of oil, which is really near all-time highs. And there's just no way to get around this. Essentially, if the price of oil is extremely high, then there will be a recession. It's as simple as that. So 114 for WTI, Brent crude is 116. The world can't function with very, very high energy prices and very high oil and gas prices. It just feeds through to the entire economy. Everyone feels it straight in their wallet when they're filling up their car, and heating their homes, especially in, Northern Europe and North America. It's just the best indicator we can get in terms of a recession. You can see right here down at the bottom, these are recessions. And then this is obviously the price of crude oil when there's a spike in oil. Typically, it is followed by a recession. And then obviously during a recession, the price of oil comes down and then the cycle starts again. All of this is about oil prices. There's not really any light at the end of the tunnel for these, unfortunately. So this is macro stuff. I certainly don't pretend to know exactly how the macro is going to play out because there's lots of different things, geopolitics and everything that are going to affect this. But really simply, high oil prices are not good, and that feeds through to the Bitcoin price and therefore every other crypto price. When recessions happen, asset prices just will not reach new highs and they will not break through resistance we're seeing. You get mini areas that may. And with Bitcoin and crypto, it's going to be coming down to regulation. I'm going to be making some videos about key dates to watch out for because stablecoin regulation and Bitcoin regulation, specifically to Bitcoin is obviously going to mean that more people are focusing on this. So there could be some shorter term opportunities, but the macro for me is still quite cautious. So I'm just going to come to this to finish off. This is Dylan Leclerc on Twitter. He's saying that 61% of Bitcoin circulating supply has not moved in over a year. Seems scarce. So if we just take this a little bit deeper, so what we can see really is we have the price of Bitcoin in gray, and then percent of last active supply in this kind of blue color. And what you can see, hopefully, with the gray line here is that when there is a bear market for Bitcoin or a dip for Bitcoin, that is when the amount of supply moves actually kind of reaches high percentages. So what this means for me is that when there's a dip, you see people hodl. So this happens, pretty much every occasion, right? So, when there's a dip right here, you see people are just hodling. When the price moves up, they start basically selling into strength. That happened perfectly, in this move here between kind of 2014 and 18, right? So you have this dip right here. We get the peak, and then as prices are moving up, obviously people start selling off into strength. Reason being is that if you've bought at a peak, a lot of people buy at the peak, they get in and they say, all right, well, I'm underwater. I'm not going to sell. I'm just going to hodl. That was a speculation anyway. Who cares? And then when the price starts moving up and reaches all new time highs, people think, oh, okay, I've got that Bitcoin in there. Maybe I'll just sell it, right? I'm in profit now. And that's essentially what happens to me. And you can see right here, as we get a new peak, you can see that essentially a lot of Bitcoin is new and kind of actively trading, and then when the price falls again, people start hodling again. What we see right now is that essentially we're in a phase of accumulation in the price because we're not reaching new time highs, and so basically people are hodling. A lot of people are underwater. More people are underwater right here, right from when they bought kind of in the 50s or maybe 60s. So they're hodling and they're just waiting again. This is not amazing for me. This essentially proves and tells me that we're in a bear market for Bitcoin, or I hesitate to call it a bear, but certainly an accumulation period, right? So we are in a accumulation period between a very distinct bull market and then the next very distinct bull market. I do not believe we're in a bull right now. You can obviously, so this is a subjective call based on the time horizon that you're looking at. Obviously, I would say Bitcoin is in a decade-long bull market. Long term, but if you're looking at short term, I think this proves it, right? So people are hodling because a lot of people are underwater. Maybe, they just, if the price was at 150K, you'd get a lot of people selling. So that's where we are. Now, for me, what I would say off this is if you're long term, if you're looking maybe a few years out, these have typically been very good periods to accumulate, right? If you accumulated down here when people were hodling, you had this great move a few years after. If you accumulated down here, you had this great move a few years after, and then this is another accumulation phase. So take that as you will. Like everything with trading, it depends on your time horizon, right? It doesn't really matter what you're trading. It's all about time horizon, and obviously when you want to get out of your trade, whether you're looking more at longer term cycles or more here for the short term. So that's that. But like I said, if you want to look at the crypto course, everyone in the crypto course is getting these new videos. And if you want to look at Bybit, you can get a $4,000 deposit bonus on there as well. Links in description. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.